Listen up because we're diving headfirst into the wild world of futures. These ain't your grandpappy's stocks and bonds, folks. Futures contracts are agreements to buy or sell an asset. Think oil, gold, even currencies at a set price on a future date. They're powerful tools, but let me tell you, they can be riskier than a bull in a china shop if you don't know what you're doing. We're talking serious leverage here, people. That means you can control a boatload of assets with a fraction of the cost. You gotta come prepared, understand the risks, and have a solid plan. Stick with me and I'll give you a crash course in navigating this market like a seasoned pro. Alright, first up is a mistake I see traders make all the time: jumping into the market without a plan. It's like trying to build a house without a blueprint. You're just gonna end up with a pile of rubble. You need a solid trading strategy, people. A real strategy outlines your entry and exit points, your risk tolerance, and how you'll manage your trades. And don't even get me started on risk management. You gotta know how much you're willing to lose on a trade before you even hit that buy or sell button. Think of it as taking your trading plan for a test drive before you hit the open road. Next up is a mistake that'll drain your account faster than a leaky faucet: overtrading. Look, I get it, the market's moving, you're itching to get in on the action. But too many trades, especially without a solid plan, and you're just gonna end up chasing your tail. Instead, focus on quality over quantity. Pick your trades carefully, based on your strategy, and make them count. You gotta find that sweet spot, a position size that aligns with your risk tolerance and overall strategy. Now let's talk about understanding market dynamics. Futures markets are like a giant jigsaw puzzle, with pieces constantly shifting and changing. You've got economic data, geopolitical events, supply and demand, all playing tug-of-war with prices. Ignore these forces, and you might as well just throw darts blindfolded. That's why it's crucial to keep your finger on the pulse of the market. Read the financial news, follow industry experts like yours truly, and track those economic indicators. The more you know, the better equipped you'll be to make informed trading decisions. Now let's talk about risk management, folks. This ain't just some boring technical stuff. This is your financial life preserver. Remember what I said before about leverage? Well, it can amplify your gains, but it can also magnify your losses faster than you can say margin call. That's why you need a rock-solid risk management strategy. Think of it as your financial safety net. First things first, you gotta know your stop-loss orders like the back of your hand. Diversification is key. Spread your risk across different asset classes, sectors, or markets. Finally, let's talk about the mental game, because let me tell you, trading psychology is just as important as any technical indicator. The biggest mistake you can make is letting your emotions call the shots. Fear, greed, hope. These are the silent killers of profitable trading. When you let your emotions get the best of you, you start making irrational decisions. So how do you avoid this emotional roller coaster? Stick to your plan. Don't deviate just because you're feeling a little anxious or overly optimistic. Learn from your mistakes, adjust your strategy if needed, and move on. Alright folks, there you have it, the top 5 mistakes to avoid in futures trading. Remember, this market can be a wild ride, full of ups and downs, but if you do your homework, develop a solid plan, and keep your emotions in check, you'll be well on your way to navigating this market like a pro. Embrace the challenge, educate yourself, and remember, knowledge is your most powerful tool in this game. So, get out there, trade smart, and remember, the only bad trade is an uneducated one. Now go get 'em.